Wow, what a roller coaster this day was. The market did not initially like the CPI data. They were perhaps concerned about the fact that core CPI hadn't come down and was actually ticking back up. The regular CPI came out pretty good. Year over year, it was down to 2.5%, which was actually one of the lowest reads that we've had since March of 2021. But core CPI had not really fallen as much as people had thought, but it was in line with expectations. If it had fallen, then there was the belief that the Fed could potentially give the market a 50 basis point rate cut. But when they saw that it was sticky, then they knew that the Fed was only going to do a 25 basis rate cut. Now, the market, it was a roller coaster. And if you got shook out of a play, it's probably because you're playing things conservatively, and you probably should be playing them conservatively. And you might say, well, why is that, Josh? Because the markets were green today and we're absolutely on a burner going higher. Aren't we going back to all-time highs? Well, we could be. This could be a V-shaped recovery that's going to break our previous high. But at the moment, if you look at the chart for since July, this is a market with big tech that's been steadily on decline. I'm going to show you guys that in the chart here in a few minutes. Now, we need to get some confirmation before we can get excessively bullish on a market that's going to go and break its all-time high. And we know technically that the inverted yield curve in this last couple weeks has uninverted, and that typically leads to two things. Every time the yield curve gets uninverted, two things happen. It typically precedes a Fed rate cut. What do we have this month? Days away, we have the Fed giving the first rate cut, so everything's on track. The second thing it precedes is a slowing economy, because the Fed is cutting rates to increase liquidity, because he foresees that if he doesn't, the economy is going to slow down, and big tech companies and the AI narrative is going to slow down alongside of it. And I want to remind you guys, what makes stocks go up in value? It's entirely and 100% the increase in revenue and the increase in profits. And if there begins to be too many layoffs, and if the economy slows down, well, then people are going to sell, right? But we've seen some incredible choppiness. I'm going to take you guys into the NVDA chart, Tesla chart. I'm going to take you into another big tech company's chart, and we're going to look at the SPY and maybe even a little bit of Bitcoin. We're going to try to get a lot in. I'm going to timestamp the video. This is the Stocks with Josh show. Thank you for joining me today. Thank you for already hitting the like. In our live trade VIP member group today, we entered into SPY puts, and we barely got a piece of the big move. The SPY continued to capitulate, and after that, once it hit its bottom, it came all the way back. And so it was a tough day. If you were waiting for a break, if you were waiting to get back in on a pullback, the market initially dropped, people probably panic sold, and then the market climbed and it never gave a pullback. This was truly a V-shaped day when you look at the S&P 500. And I'll just tell you guys, don't beat yourself up if you're trying to protect your capital right now, because as I've said, there's not a question as to whether or not we're going to get a recession. We're 100% going to get a recession. A recession is a move down on the typical market of at least 30%. Now, the question that we have, and what you're going to find me debating from day to day on this channel, is how quickly are we going to move down? When are we going to move down? And how quickly are we going to recover? Because if you examine all the previous recessions, some have been resolved within 30 days. Many others have taken more than 365 days to have a full move to the downside and a full reversal. Now, personally, I've said in a recent video that I think this is going to be a quicker move, because I think that largely there's two things that are going to continue to drive the economy higher. We are in a moment of incredible innovation, and I think there's going to be new profits discovered. America has been leading the AI revolution. American companies are going to do that, and I think it's going to drive market share for all of them and their products in the coming days. And then you've got the second factor, which is the fact that we have a government that loves to spend. And I said to you guys, doesn't matter who is going to be in the White House, both of them are going to spend, spend, spend. One will say they're rebuilding America. The other one will say they're saving America, but they're going to spend. And when you put those two factors together, spending and AI, and we're in an election year, which does bring a sense of hope, and it's a reset of opportunity. With all those factors together, when we do get into this recession, when we officially enter into decline, I think it could be short-lived. And so you want to be prepared and you want to have a trade plan, because when we do pull back, we're not pulling back much right now, right? We've been on decline since June and July of this year, but right now we're having a nice, beautiful day. The question is, when are you going to put your money to work? Are you going to put it to work when the market goes down 10%, 20%, 30%? I have been trading long enough to know that when the market gets down to 30%, everybody has been conditioned to expect it to go lower. And very, very few people will take the time to begin to buy, because it takes real courage. So we're going to do it together. Follow along. And in the Stocks with Josh Discord, tomorrow I'm going to be dropping the class on the 3K to 10K challenge, and we're going to be doing daily trade alerts on that. I've been asked who's going to have access to that. Everybody's going to have access to those daily trade alerts, but only the middle tier and the upper tier are going to have access to the education piece that goes along with it. And so that's the way that's going to roll out. Now, next week, we're going to get the rate cut September 18th, and the market is priced in an 85% chance of a 25 basis point cut. I'm sure we'll get that, and it doesn't appear that we'll get the 50. If we got the 50 at this point, it would be interpreted by the market as a fearful reaction, and the market would probably not like that. The average hourly income did outpace CPI. Right now, the fact that real world wages are going up and core inflation is still a little sticky is telling the market that the economy is not as bad as people are concerned about. And so I'm going to tell you guys, again, I want to keep it clear. The overall story on this video is that we have been in decline since July, and the market has been slowly making lower highs. And you've seen in just this last week how hard the market can sell off and how hard the market can get bought up again. We're going to continue to see more of that. And if this market gets a single data point that it doesn't like, that's what you can expect. You're going to see more heavy selling. All right, let's jump into some charts very quickly. I will time stamp the video so you can look at which one is specifically of interest to you. Let's start off with the SPY chart. So midday, when the S&P was fighting with 550, I drew this resistance line at 554. Didn't get the video out early enough, but surprisingly, we came all the way up and hit my resistance and stopped. Charting is not that complicated. I based that resistance on a number of factors, one of which was structure, where we had found previous resistance the last time we had run up. We found resistance there again today. So here's what you need to know. We had the goal that we had to have a candle press through 550 so that we could complete stage one of breaking and canceling this giant bearish candle. We did accomplish that today, but I want to remind you guys what step 2 is. To confirm that we are now in an uptrend, the next candle has to open and close above 550, and that would tell us that we could continue to climb. Now, if we come back tomorrow and we close back beneath 550, then just cancel this giant green candle because it was a fake out and a bull trap. That's what you need to know. And again, as long as 540 holds in the days ahead, we can continue to move sideways, but the day 540 breaks, then we expect to come back beneath 500 after that. Okay, let's talk about Bitcoin. So Bitcoin gave us a scare midday. I did some leveraged crypto trading today and made some nice money as we began to push back up. I actually rode some meme coins down and rode them back up. We needed to stay above 54K. That's our first goal. We've accomplished it. We need to continue to stay above this 56,464. We've accomplished it. This candle, this weekly green candle that we're in, doesn't close until this coming Sunday at midnight. And if we close above 56,464, then we can give the markets the benefit of the doubt that we're going to continue to move higher. So right now, nothing has really changed on the Bitcoin front. We're holding and we're moving higher. All right, let's talk about Tesla. So first thing I want to point out is this little fire here symbolizes the day that we got a buy signal on my custom indicator, the flare. This was telling me that Tesla was going to move higher. Now, the following day, we had that really rough Friday, and we got this bearish engulfing candle. Now, the last 3 candles that we've gotten on Tesla have all been inside days. And the area that we had to get above for us to believe that Tesla was going to continue to be a buy, as the flare indicator suggested, is that we had to recapture 50% of this ominous red candle. That price point was 222. We did recapture that yesterday. And the next step to a move higher is that we had to open and close a candle above 222. Well, we really had a scare today. I got kicked out of my Tesla position, which kind of frustrates me, but I have worked my way back in, not to the full position. I was hoping for some pullback. This is what happens. People get locked out. They get kicked out, and then they get locked out, and it just climbs higher. So let's just talk about what it has to do moving forward. Well, the next level that it's got to break above is 228.40. Now, if it did that, we'd be in the upper half of the channel, and that's the bull territory in the channel. So we would continue to find strength. And if we do that, we can move all the way to 245. Now, let me talk here a little bit about the fundamentals behind Tesla for a minute. So obviously, I like Tesla, and I believe that Tesla is moving towards this big catalyst event, two catalyst events. One, as an automaker, they are rate sensitive. Lower rates is going to enable more people to buy more cars. Number two is the Robotaxi Day, October 10th, which is right around the corner. And so I think that Tesla's got two catalysts, and I think that the market could easily buy it up all the way back to 245, even back to 253, putting us right back where we were before we had this recent pullback, to see what type of data is going to come out from Elon Musk. You have to remember, everybody thought this was going to come out a month ago, and then he kicked this event down the road. Now, I think there's a ton of opportunity for Tesla right now over the next 30 days. But I think we're going to be in the exact same boat. Unless Elon comes out and absolutely wows Wall Street, Tesla will yet again fail at that 253 level, and it'll yet again sell down. They've got to come out and they've got to show that they're further along than anyone expected. That's the only way that we're going to break above 253 and go back to 300. And I think that right now the market's going to slowly move Tesla up the closer we get to that event. Now, there was some very interesting data that came out today about Waymo. Those guys have put in 22 million driverless miles since June, and they came out with a safety report which clearly showed that their vehicles were far less likely to get into an accident than vehicles that are driven by you or I. So there was three categories which they provided data. It was one, they had fewer airbag deployments, they had fewer injury-causing crashes, and they had fewer police-reported crashes. And the absolute lion's share of the crashes that they did have were not their fault. And so they're clearly beginning to build a case for ultimately, which I think you guys can know the way this is going to go, that they're not going to let you drive your vehicle anymore because you're just not safe enough. And so slowly but surely, this is all moving towards autonomous driving. Now, Waymo's out there way ahead of everybody else with the practical application, but we know that Tesla can come out like a juggernaut and really get dominance in this sector. And that's why this event is a catalyst, and that's why it's very important. And, so again, I think the stock's going to climb all the way up to that event. And at the moment, my target is around 245, but it wouldn't shock me if we got all the way back up to 253, which was the spot that we couldn't break above about a month ago when Tesla was moving. All right, I'm going to do two more charts for you guys. We're going to take a minute and look at what's going on with NVIDIA. All right, if you take a step back and you look at the big picture here, as I said before, NVIDIA has been in decline since June of this year. We've made a series of lower highs. We broke out of this area, but we consolidated, and eventually that breakout failed. We came back, and we've now made a higher low, but this cannot be considered bullish until we get a definitive move above this descending line of resistance. Now, I do like these candles because I do believe this giant green candle has essentially canceled this red candle that we got the other day. And I do believe that we are slowly pushing up to 118 to 122. I think this is the area that we're moving towards. And from a very practical standpoint, as long as we stay above 108, I believe that we are going to continue to move sideways and up. And so I'm going to continue to give NVIDIA the benefit of the doubt. Now, If you followed me in this trade, you got out at $124 because I notified the Discord that I had my position cut via a stop loss, and I told everybody that I was going to nibble at 112 and get in heavier between 103 and 106. That's exactly what I did. And then I told everybody yesterday it's time to 108 was going to be the line in the sand, that if we could stay above it, then we would be rocket ships. If we fell beneath it, we were going to be in trouble. Well, today we covered that full range. We lost 108, which was very scary, but then we reclaimed it and we ended the day much higher. Hopefully you guys have made a ton of money following that trade. Don't follow me. Do your own due diligence, your own technicals, but it was profitable yet again to buy. And I cannot tell you guys how often and how many comments I got that told me that I was making a huge mistake to be buying in the range that I was buying, and that this was going down to $50, $80. People were telling me my first buy is $90. Well, guys, it didn't matter to them that I had just nailed the top just barely within the previous 30 days. And here we have again, nailing it. So I'm hoping you guys are picking up what I'm laying down. I'm hoping that some of you followed me, and I'm hoping you guys are up big right now. And I'm gonna keep laying out what I see in these charts, and hopefully it's gonna help some people. Let's look at one more chart because I think it's part of the story with WAYMO and Tesla, and I think it's going to be an interesting stock to watch in the coming days. I'm watching it, and I want you guys to watch it, and that's Uber. So Uber is in an interesting spot. Now, these guys could get absolutely crushed by automated driving, but they kind of know that something's coming, and they've created a contract with WAYMO. So if they're able to successfully navigate this change of innovation, then they're going to thrive, and they could even be positioned better than most to take advantage of this change. And so you can't discredit them too soon. But like a lot of other companies, they're way off their highs. And we're going to watch that chart to see if we're breaking up or breaking down. Let me show you guys the line in the sand on Uber. Okay, you guys can see what I've drawn already. We have the potential of a bullish inverse head and shoulders pattern. And I want to remind you guys the way that it works. You take the distance between the neckline and the head, and that is typically the move that you get when and if you get a breakout. And so now we've got a nice little candle here, a nice little bounce on support at 67. And so we might have already formed the right shoulder, and we could be slowly moving back to this $75 neckline. We could get up there and we could fail, and we could go on to make a lower low, right? And continue the trend to the downside. But if we do break above it, then we have to acknowledge that our new target for Uber is all the way up here, right under $100. And so Uber is definitely at a decision point. And again, if we get to that neckline, this thing could break out from $75 to $100 very quickly. We'll keep our eye on it. Appreciate you guys joining me today. Thank you again for the likes. It pushes the video out to more viewers, and you can get more content. You can get those classes, and you can trade that challenge with me by joining the Stocks with Josh Discord, ChartGoat University. I'm going to leave a link in the top pinned comment for that. It's stockswithjosh.com. I hope to see you over there. Take care. Peace and blessings.